Welcome back, crew. We got Bitcoin sitting at a major decision point. We got Ethereum that really sparked and jumped up a bit that your boy Tom called. What a nice little breakout above 3,240. We got altcoins that are actually lining up for like I don't know, a clearance takeoff, a clearance sale. But none of that compares to what's up and coming with the rate cut decision today. It's probably the most important Federal Reserve meeting of your life. Until the next one, of course. Right now, this is the most important one of our lives, right? We're heading into really what could be Powell's final stretch. We got a fractured Fed. We got Trump jawboning and scaring the bond market. There's so much stuff that's happening right now, but really, we got the first potential balance sheet expansion over 3 years. And really, this is the week where liquidity gets rewritten. And if Powell fumbles this, Bitcoin's going to be the first asset that reacts hard, hard. So let's dive right in. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, please give us a like. Make sure that you hit subscribe if you have not already. Please tell us, tell all your friends about us because we're trying to build a huge trading community. Come on over to X and follow us on X where we talk about Bitcoin, crypto all day, every day because we are crypto maniacs. All right, let's get right into it. What is going on? We're saying Bitcoin is at a decision point. It's working. Lock was moving lockstep with the Fed sees room to cut rates from Williams, and now it's priced in. It's priced in right now. So if they don't do it, oh man, are we going to be in for a turmoil? So now. The reason why I'm even putting that out there is because this is it's a split Fed, and we're going to go over some scenarios, but just hang tight. We're going to cover it all for you in this video. All right, so right now we got three particular scenarios that we're looking at, all right? If we can get above, say, 94, 95,000, we got flipping above at 93, which is potential. We can get basically a movement up towards like 100, 103,000. Okay. We could get a retrace. We're thinking back down towards maximum, like maybe 78,000. If that level holds and we get the spike up, then we could get the breakout upward towards the 103, 106,000. Okay. Then we're thinking, well, if they don't do something, all right, or something comes into the marketplace, spooks the bond market or something, we're thinking we can get a 69,000 maximum fear entry point. Now, we don't get to choose the path of the market. We are all, subject to, we're at the mercy of the marketplace. But you do choose your positioning, right? So you can basically figure out how you want to get involved with this thing. Now, of course, you could short it. You want to go short? Yeah, absolutely. If you shorted the 94, right now you're back at 92. All right, but you got to be very, very cautious with it. All right, so now, as it stands, let's get into our 2-hour Bitcoin breakdown. All right, so we came up to the lofty level of what? 94,588. So right now, damn, here's the point again. The 91,000 237 again comes back into play. Now, if we break through that, we are basically now. Let's say, for instance, right now it's priced in that they're going to cut rates. Right? If we come over and we look at the CME Fed rate cut watch, currently sitting at 87.67. That was like the last reading that we had because it's 8:09 in the morning. So really the market's really looking for this rate cut and it is priced in. So what that leads me to believe is that the inability to get up over 95,000 is actually showing there's still some inherent like sellers up there, big sellers up there. So we're thinking, and I'm thinking right now, if we break the 91, we're going to drift. Actually, we could go down towards right here is the level 89,000. Let's say I would actually come down right to this level here, 89,000 even. If that level goes, we're opening up 87,000. If that breaks, okay, we're opening up like the lower level at 83. and okay, really good support at 82,000. So, what am I saying overall is I'm thinking that if we break, where could we go? Let me see something. Like 89,000 would be the first like level. All right. If it breaks the 89, it's going to go deeper. It'll probably go like to 83. That's what I'm thinking. Okay. If somehow we can get out above the top here at 94, 95, we got a chance to ride up to like 98 where there'd be resistance. Probably could be a pop back down again towards this previous high right here. It should act as support at that point if it's truly going up, and then we can maybe attack, like 101,000, 102,000. But just, don't be irrationally exuberant. We got to plan our trades. There's going to be a little bit of turbulence, all right? Definitely going to be a little bit of turbulence. So we got momentum improving, but waiting on the Fed right now. Now, we look at Bitcoin, the last three times, the last three bottoms were really easy to miss. So we don't want to miss out on this one. If the market's truly going to be in an upward movement, we want to basically be in on it. So that's why I suggest, you get into our pro group. We talk about it all the time. It's free. It doesn't cost anything. You don't have to do anything. You can just hang out, just see what we're up to and say, hey, I like this. I don't like it. It's totally up to you, right? But last time, they all printed the same signal. The RSI bottomed, DSS flipped bullish, and Bitcoin pumped 174%, 85%. We had a 48% pump. Right now, off the lows, we're about 15% up off the lows right now. Now, I'm not saying we can't dip back down to this level. I think it would actually be healthy if we came back down to the 81.6 or 80,600. As long as we don't break 78,000, we're fine. If we break 78,000, we're gonna retest the lows, the all-time lows again. In my opinion, like 74,000, 75,000, and that's a very critical level. But we just got to make sure that we follow because RSI hit a March 2020 level, okay, and the ones who saw it then see it now, and we're paying attention to it because also now eventually this is going to come to fruition. We're just waiting for like gold, like Bitcoin to follow gold. There's a chart I'm looking for. We're looking for the breakout to occur in Bitcoin and it actually mirror gold. Right now, Bitcoin's been quiet. Gold is still doing well, but we're expecting Bitcoin to actually match and actually surpass, what gold has done. That's our opinion. Okay, that is our opinion. So when Bitcoin's going to break, when it breaks out of this wedge, it's going to go parabolic. We have multi-year compression here. We have peak energy. We have, liquidity shift is loading. And what do I mean by that? I'm going to get into that in a second. Don't forget, we got the big boys in now. Vanguard, okay, Schwab, Merrill Lynch. They're all coming. They're all coming. And that's going to happen in January. They're all going to come out of the gate like stallions running out of the gate. So we got to keep our eye on it. Now, it won't be, when this happens, you're going to see the beginning of like the super cycle that everybody's talking about. Now, the Bitcoin cycle itself really has been unfolding right before our eyes and is doing pretty well. We have what we got accumulation, right? We got accumulation, we got manipulation, right? And we got distribution that has to happen. Now we're in phase two. Okay, so retail is loud, smart money is quiet. You gotta watch the Black Rocks, you gotta watch the Vanguards. They're trying to push, they're trying to manipulate more. Okay, so the silence of smart money, it's the sound before they actually all get involved and they actually start really throwing some big money around. It's happening, okay? So really it's the sound before the breakout. Now, I'm going to take you back to the ISM, okay, Purchasing Managers Index. Now, it was still in contraction, okay? However, new orders actually sparked up. Now that's going to occur in 2026, Q1 of 2026. That will actually hit fruition. But every major bull market began right here. Now, when it starts heating up, it could flip very fast. So, really, the end of this month, or potentially going into the beginning of January, that can actually surprise everyone. So, smart money watches this. Retail doesn't, but that's why I'm saying you got to pay attention to it. It's going to come into play in Q1 2026, and but right now we still may be in for some more turbulence. I want to say that now. We also have to say I have to say that Trump, in a recent interview, basically said that support. He said that one of the criteria for taking in the next Fed chair is going to be a commitment to rate cuts. Trump, please just shut up. Stop. Stop. You're going to spook the bond market. If you keep saying that, you can't look. I understand the man is used to running, a business, and he was the CEO, CFO. He was so everything he said, had to go. He was the commander of all his companies. You can't treat like interest rates like this because really what Wall Street's saying is that's too close to you. That doesn't mean independence anymore. That means that it's going to be, whatever your whim is, that's what the guy's going to do. You can't do that. You gotta, like, if you want to do it quietly. Do it on the QT. Don't be announcing it, okay? Because the statement has stirred debate because it directly challenges the traditional independence of the Fed. And many see this as political pressure on monetary policy. It's going to spook the bond market. So, I mean, let's go over to the 10-year. The 10-year has been steadily climbing. We cannot, if it goes over 4.5%, the S&P is going to dump. Russell's going to dump. Bitcoin will dump. That's the way it is. So please just keep quiet about it. All right. I mean, there's many ways they're going to add liquidity. Okay. Quantitative. It's not going to be the quantitative easing that you're used to seeing in like 2020. It's not. I explained this in yesterday's video. So if you haven't seen it, go back because yesterday's video because I cover it pretty well. They're going to be doing reverse repos. They're going to be doing lowering, the discount window. They're going to be forcing, banks to buy T-bills. They can do it many different ways, and they can jawbone it down, But you can't be saying, hey, the next governor I pull, he's got to listen to what I say, or else he's not getting nominated. You can't say that. Look at what the bond market's doing. This is gonna really mess us up. So, Mr. Trump, just keep quiet. All right, let the market handle it. We got this. We got it. We've been doing it over 30 something years. We got it. Just relax. All right, let's move on over to Ethereum because good old Tom had a pretty good call on Ethereum yesterday. Okay, before I jump to Ethereum, look, here's also one of the levels that we have. Don't panic. You got to buy the fear in this thing. Now, of course, you got to do it. You can't stand in front of freight trains. That's why I suggest that you get into our pro group, and we'll help you out with it if we get that dump back down towards the 78,000, which is possible. Okay. And now, if they do cut rates and everything, we probably stabilize a little bit. And then slowly start moving. But I still think that we got room for a movement down. Now let's get over to good old Ethereum. All right, so we got Ethereum that outperformed today. It's up about 6.5%, trading above 3,300 right now. Now, the Ethereum Bitcoin hit the macro reversal zone. We alerted you to that. Good old Tommy had told you that if you broke out through this top, you're going to get a rally. I said we're going to get up to like 3,500, maybe a little bit irrationally exuberant, but that's still in play right now. Now you got a small little mini flag on this 2-hour chart. Potential. If we get that rate cut, we could get a movement up there. And what was that all based on? Well, I took you back and I said, look, if we come here, this was actually, if I look at this down candle, right, the close of that down candle, the last downward movement before we had two consecutive upward movements, two consecutive closes higher, was this price right there, 3,234. Look how it marked. Once the marketplace broke, it was like a demarcation line. It actually acted as incredible resistance to push us down. Now, look at this. All right, so now once we broke up above that, it actually threw us up. And I was targeting a previous point there, very, very similar, 3,531. Now, guess what? Now we got to change our pitchfork. Okay, so we're going to do that right now because a lot of people say, hey, how do you use a pitchfork? Well, it's really kind of subjective, right? So I'm looking at this marketplace right here. Now we broke out of the top of this time. So what can we do with it? Well, we could say now this low that we have, which we've been using as like the point to say we can't really get through, we can't break below that. If we do, we're in a little bit of hot water. You use that as that point as a low. So with a pitchfork, what you do is you go, the sequence goes like this. Goes low, okay? Go to a high. We can use this high right here. We can come down to the deepest low that we got right there, and now we fit the pitchfork there. And then what we could do is we could actually get rid of this one, kablamo, and there's our new pitchfork. Okay, so basically just mirroring the market movements. And you notice the points that I picked, like this is amazing because like we picked this low, but look at this spike down. Not only did it go to the point where I said it should hold, but it really touched this tine beautifully. Unbelievable. So that's symmetry. That shows you that, okay, I may have a very, very good pitchfork here, but nothing is ever guaranteed with these things, right? So you just got to, make sure that you just don't fall. Look, you date these things, but you don't fall in love with them. All right, so right now, we got same pattern that's happened as 2017, 2021 before altcoin ignition. Altcoins are basically sidelined right now. Everything all focused Bitcoin and Ethereum. All right. We could still look at Bitcoin dominance. We could still look at, what's going on with altcoins. But really, it's you can't be taking a shotgun approach with altcoins. But anyway, so right now, as it stands, okay, so we got Ethereum that ran up to, what did we run up to? 3,004. Let's say we ran up to 3,004. Okay, so 3,100 right now should be support. 3,100. If we could hold 3,100, we have a chance that we can get up to that 3,532. If we break below 3,100, we're probably drifting back down towards the 3,000. I'm going to say right here, right down into this level right here, 3,001, 3,150, something like that. Has to hold that. But if we could get up through this top right now, then we got a chance at springing up to 3,005. There's going to be resistance up there. So don't think, that's not the area you really want to buy it at, okay? You want to buy it at, like, where I told you this breakout was going to be good. Now we could retest this price, right? Could easily retest it. But as long as we hold, like, say, 3,100, I'll even go so far as say 3,000. It's probably in like a good area for it to spike up a little bit. It's not in a breakout yet, but remember the Fusaka upgrade. Everything's coming into play with Ethereum right now. Behind the macro behind. All right. So if we look now, I'm going to take you over to that Ethereum Bitcoin I was just talking about, the breakout. So we got it right here where I said we hit the macro reversal. Ethereum versus Bitcoin broke out. So did Ethereum versus the US dollar. So right now we have we got to say it's an undeniable pattern right now. So it's the same as May, same as July. And right now it's like accumulate, consolidate, breakout. That's exactly what happened. So Ethereum's rotation phase is loading right now. So we've been telling you, pay attention to Ethereum. Ethereum, we're thinking is going to take off. We're thinking it's going to, 10,000. When? Tomorrow. I don't know when. It's gonna go there when it goes there. But we're thinking Ethereum is going to be really a coin that most people hate. The most hated rally, but it actually it's in the queue to do it. It's in the queue to do it. All right, now I want to jump into the Fed and what's going on with the Fed today because it's not so much the rate cut. It's really what Powell is going to say about the Fed and what their position is. Because remember, as I said, the Fed is really divided right now. And you got good old Donald coming in and saying, well, the next guy is just going to do what I said he's going to do. And I reiterate again, that's not good. You may all be cheering that because you're going, oh, yeah, then all bags are going to go back up. No, man, because the bond market controls everything, the 10-year. And it's very important to watch that market, okay? Now, So let's just get into this. Okay, once again, the most important week of your life for the Fed, of course, until the next time the Fed meets, right? So Powell is running out of time before he's replaced in May of 26. Markets expect right now a 25 basis point cut this week. Let's get over to this chart right here. That's not the chart I want. We got non-farm payrolls here. This is an important chart. Okay, so we may get the first signal of balance sheet expansion in 3 years. Okay, but the Fed really is still flying blind due to the shutdown delay. So they're working with September data. Now that may cause them to potentially pause. I don't know. I mean, we got 87% chance of it happening. If it doesn't happen, hold on to your seat because the market is one way. I told you this yesterday. Now, I'm not saying it's not going to. I mean, it's really strange that I'm basically giving both scenarios as a trader, and I get people that comment, "Oh, he's turned from a perma bull to a bear." I haven't turned bearish. I even said that like the dip is really would be very, 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 very good to get to accumulate some Bitcoin. I'm trying to follow what the big boys are going to do, which is Vanguard, you know, BlackRock, all those guys. They're all sitting in the background waiting, and they're trying to push it down. So now look, CPI is really, if we look at it, what's a reason not to cut? Look at CPI. It's been sticky. It's 3% year on year, rising since May. That's not good. So now, these are best case scenarios, worst case. Non-farm payrolls can give you an argument that you can cut rates. CPI can give you an argument that they could hold off. Now you got what non-farm payroll in September was up 119,000. All right, so, but you got ADP numbers that came in November that were down 32,000. You got unemployment sitting at 4.4%. You got claims that really are at a multi-decade low, but people fell off the roll. So that's the problem. So labor is sluggish, but it's not broken. We still, right now, rate card odds at 87%, but the Fed is fractured. So we get a dovish cut, rally. We get a neutral cut, mixed. We get a hawkish, any type of hawkish, and crypto's taking a big hit. And that's the way it goes. Medium-term rates cuts are near all-time highs, which equals bullish historically. So that's for actually the stock market itself. Okay, so we got balance sheet expansion. We got the QT that ended on December 1st. T-bill buying likely going to start in Q1 of 2026. It's going to be $20 billion a month. Okay, it's not going to be that QE that you saw in 2020. It's just not. But it is liquidity positive. All right. So we could also start to see bearish US dollar, which is bullish on crypto, on the margin. So US dollar dominance coming off because of this. And, that helps, right? So now let's tie it all together. The Fed, Powell, the final months and the quiet but massive entry of who? We got who's coming in? We got Vanguard. Where's my Vanguard? Right there. Vanguard's coming in. Who else we got coming in? We got good old Merrill is coming in. We got Charles Schwab. That's coming in. We got who else? What is this guy right there? And also, of course, you had the chair right here, basically of the CFTC becoming crypto friendly. Not only that. There's potential for a crypto bill to be passed very quickly. So that is all bullish. Okay, now, but here's the truth. If Powell comes out hawkish this week, so in other words, let's say they do the 25 basis point cut, it's already priced in, but then he says something where he becomes a little bit hawkish in his statement, like saying, we're collecting data or some other nonsense that he likes to say. Well, that's going to put a curtail a little bit of the enthusiasm in the crypto market. However, we know that he's being replaced. All right, so we know that he's being replaced. Now, if he comes out and he does not cut rates, if they do not cut rates, he decides to hold the line until his replacement arrives in May 26. This may look bearish on the surface, but in reality, it could be the single most important long-term tailwind Bitcoin could ask for. Now, we're going to go through pain. Yeah, we're going to have to trade the duck feathers out of this thing. But you got to remember, it could be, for me, it would be like really long term. It would be bullish for Bitcoin, okay? Because the marketplace would actually, the long bond, the 10-year bond would really love this. Now he's saying if he stays dovish, how's it good? I mean, I'm sorry, if he stays hawkish, how's it good? Because liquidity will still leak into crypto. Even a hawkish Powell can't stop what's already happening. QT is over. Balance sheet expansion is telegraphed. The board is fractured, but dovish pressure is rising on the board. Hawkish tone may slow equities, but it cannot stop structural liquidity. Eventually, that's coming into the marketplace. Here's a picture of the structural liquidity. Okay, M2 is expanding. Remember, Asia, all that stuff that we talked about in previous videos. Okay, so he cannot stop the structural liquidity. Again, now we got institutions that are entering crypto. Okay, 2026. Like I said, we got good old Vanguard. We got, well, who else? We got Merrill. We got Schwab. Okay, you got, now remember, Merrill's actually, okay, we got that decision against, we got to watch out for strategy. That's another, you know, landmine that could happen. I think the decision's January 15th. So really what you got going on here, this is not trader money, with Vanguard, Schwab, all the big players. This is the architecture of American wealth. Vanguard's got 9 trillion. Merrill's got 4.5 trillion. Schwab has got 8 trillion. That's a total of 21.5 trillion. If you even allocate a 0.5%, okay, a 0.5 allocation is basically 100 to 120 billion in Bitcoin demand. Is that out of the question? If you think about it, remember you got Merrill that's actually going to be, pitching to its clients that are thirsty to get involved in this market a potential 4% allocation. And as I said, not everybody's going to take it because you got people that are like 80 years old. They're like, no, I'm fine with my $40 million. I don't want to take any more risk. But you got a lot of the young, wealthy people that are in that group that are going to say, yes, I want to get involved. So you got the advisor pipeline turned on. Once advisors get the green light, you got model portfolios add 1 to 3% Bitcoin. Auto rebalancing is going to take place. They're going to buy Bitcoin every quarter. Retirement money drips into ETFs. Target, dates, fund, adoption, exposure. This transforms Bitcoin from, trade to allocation. So risk perception is going to flip. Now, of course, this is going to take time to work, but Bitcoin has become, part of the macro asset class. So that's what we have to understand. So Bitcoin behaves like a tech stock, starts behaving more like a global monetary asset after this. So it should calm Bitcoin down. And that's what they want. They want to calm it down. They're tired of the flips, man. They're tired of it. The big boys want to control it, and they want to keep it contained to maybe 15% drawdowns or 15% deltas instead of 40, 50, 30, 60, who knows? This stuff has been all over the map, but they want to control it. So what they're trying to do is they're trying to get it to behave like a global monetary asset like euro dollar, like dollar yen, like that. They want to control it. They can control 6%, 7% risk. They don't like greater risk than that. So the real bottom line that we're saying is Powell doesn't cut and he stays hawkish until maybe Kevin has it. It's not going to stop Bitcoin in the long run. It's going to underpin it. Because the real liquidity wave isn't Powell. It's Vanguard tokenization engine, Merrill's advisor network, Schwab's retirement infrastructure, a 21.5 trillion pipeline that's leaking capital, and Bitcoin is standing right underneath the drips. All right, let's talk about Bitcoin dominance as we wrap up. Oh, and before we wrap up, so how do you get into this pro group I keep talking about? And don't forget, we got something special coming for you in January. I keep forgetting to mention that, but just stay tuned. You're going to love it. So I'll show you exactly how to get involved in our pro group. You click this link right there, you'll be taken over to our pro Telegram trading community. It's completely free to join. All right. There's no money involved. All right. We drop insane alpha trading opportunities daily there for you. Hey, if you want to go it alone, we offer 2 outstanding brokers. Through our links, you get some great bonuses. Go check them out, but I do suggest that you come on over and you trade with us. Why not, man? Share the stories, join the group. You know what? You're joining a trading room. It's really cool. You can make some lifelong friends there. All right, let's get into Bitcoin dominance. All right, nothing has really changed. Still sitting right around 59, like oh 05 right now. We expected it to come up. If we get the Fed rate cut and we can get a rally in Bitcoin up above, say, 98, 99, maybe even 100, we expect this to climb back up. That would be a good sign. Now we got Ethereum that would need to hold the line and actually start moving up as well. But right now, really, it's the same story as yesterday, day before that. All right, so now if we look at altcoins, altcoins finally got caught a bid. If you look at Solana, AVAX, XRP are printing some green again. Rotation of Bitcoin to Ethereum into majors. It's still a setup phase. It's not a breakout. So this is precision positioning. It's not FOMO. All right, so just take your time, find the right coins. Don't. It's not a shotgun approach. And like everybody's asking, are we going to finally get alt seeds? And we talked about this. Like, I mean, if it breaks down through the right shoulder, okay, it's definitely postponed. But right now, if we can get back up through the top, we got a chance. But it's going to be a slow grind. It's going to be a slow grind. All right, so big picture takeaway before we wrap up today, crew. Bitcoin is no longer just reacting to macro. It's being absorbed into the infrastructure of American wealth. It's going to take time. Okay, so it's not going to happen overnight. All right, so we got the big boys coming in. We got the 3 different scenarios for you. Even if the Fed stays hawkish, even if cuts are delayed, we know that institutional flows are not going to stop. So you can't be fearful. You gotta find, you gotta pick your points. But we're thinking a good dip down would be a great place to buy. And now, if you look at it, when institutional flows do not stop, this is how a monetary asset is born. Okay, so now what do you got to do? Well, you got to come on over and you got to follow us on X, where we release the latest, hottest news on Bitcoin and crypto all day, every day. Also, what do you have to do? Well, you got to consider joining our pro group. All right. What do you got to lose? What are you waiting for? Jump in there, man. We'll help you out. Black, your bags are red. Don't worry. We'll make them green again. We'll help you make them green again. I can't say we will make them green again, but we'll help you make them green again. We'll do our best. Also, what else? Well, you got to remember, this week is the pivot point. The bond market is holding its breath. Okay, got to keep an eye on that 10-year. The dollar is watching, Powell's eyebrows right now, making sure that he doesn't come out and say something crazy. And Bitcoin is really right now beginning to front run the liquidity story like it always does. And it also be held captive to liquidity. So, as a short-term trader, you got to watch every tick. You got to watch every headline. You got to watch every shift in rate probability. But you also have to enjoy the party, but dance near the door. All right, I'll see you tomorrow. Cheers.